In this video, we're going to break down an incredibly profitable trading strategy built around one of the most reliable indicators in technical analysis, the EMA 100. Make sure you watch until the end because this strategy could completely change the way you trade. The exponential moving average, or EMA, is one of the most widely used and trusted indicators among professional traders. Today, I'll show you how to use the EMA 100 to build a simple yet highly effective trading strategy. First, open TradingView and click on the Indicators tab. Search for EMA, then select the Exponential Moving Average indicator. Next, open the indicator settings and change the parameters exactly as shown on the screen. Once you've done that, you'll see the EMA 100 displayed on your chart as a blue line. Now that everything is set up, let's see how we can use it to identify high probability trading opportunities. Before we build the strategy, let's first understand what the EMA 100 is actually useful for. Take a look at this chart. As you can see, during a bearish trend, the market often treats the EMA 100 as a strong dynamic resistance. Price repeatedly pulls back to the EMA, gets rejected, and then continues moving in the direction of the trend. The same concept applies to an uptrend. Here, the EMA acts as a dynamic support, where price frequently finds buyers before continuing higher. But is the EMA only useful for identifying trend continuation? Absolutely not. It can also be extremely valuable when spotting trend reversals. For example, in this chart, price breaks above the EMA 100, and after the breakout, the EMA flips from resistance into support. That alone is an important clue that bullish momentum may be starting to take control. But does that mean we should open a buy trade every time we see this pattern? Absolutely not. One of the most important principles in technical analysis is that no single indicator should be used on its own. Instead, you should always look for additional confirmation by combining multiple technical tools. That's exactly what we'll do in this strategy. Now, let's apply this strategy to a real chart. As you can see, price has respected the EMA 100 multiple times throughout this trend. Eventually, the uptrend turned bearish after price broke below the EMA. Now, price has broken back above the EMA 100, and this pullback is potentially showing us that the EMA is flipping from resistance into support. But that's still not enough to justify entering a buy trade. We need additional confirmation that the market is actually preparing for a bullish reversal. If we draw a trend line connecting the recent swing highs, we'll notice something interesting. The trend line has also been broken, and now both pullbacks occur at the same price level. This confluence significantly increases the importance of this area as a potential trend reversal zone. Once the pullback is confirmed, we can enter the trade with our stop loss placed just below this support level. Then, depending on market conditions, we can target a 1-to-2 or 1-to-3 risk-to-reward ratio while always following proper risk management. One important point I want to mention is that this EMA 100 trend reversal strategy is applicable across almost every financial market, including Forex, stocks, and crypto. So, once you master this strategy through practice, you can use it in whichever market you trade and potentially capture high probability opportunities. Now, let's take a look at the Bitcoin chart. Once again, you can see that price clearly respects the EMA 100 as a dynamic resistance. Then, as soon as price breaks above the EMA, we see another pullback toward the EMA 100. Now here's a question for you. What else should we look for before entering the trade? Exactly. This previous resistance level has now flipped into support. So once again, we have two strong confirmations lining up at the same price level. The EMA 100 has flipped from resistance into support. The horizontal resistance has also turned into support. When multiple confirmations come together like this, the probability of a successful bullish reversal becomes significantly higher. Now, Let's look at this Microsoft chart. Here, we're looking for a buy opportunity. At first glance, it seems like we don't have any confirmation besides the EMA because there isn't a clear horizontal resistance level that has flipped into support. But if you look more closely, you'll notice something important. We have a dynamic ascending trend line that perfectly aligns with the EMA, giving us another layer of confirmation. And that's not all. If we zoom out, we can also see that a major descending trend line has already been broken and is now acting as support after the pullback. So, at this level, we actually have three powerful confirmations coming together. The EMA 100 has flipped from resistance into support. The ascending trend line is providing dynamic support. The major descending trend line has been broken and is now being retested as support. When multiple independent confirmations align like this, the probability of a successful trend reversal increases significantly. At this point, we can execute the buy trade while always applying proper risk management and positioning our stop loss below the support area. Now, it's important to understand that this strategy isn't exclusive to buy opportunities. In two-way markets like Forex, you can use the exact same concept to identify high probability sell setups. Let's look at this chart of the New Zealand dollar versus Japanese yen on the 1-hour time frame. Here, we had a clear uptrend, but now price has broken below the EMA and is pulling back to retest it. Does that automatically mean we should enter a sell trade? Not yet. Just like with buy setups, we still need additional confirmation that the trend is actually reversing. As you can see, this descending trend line provides exactly that confirmation. Price not only retests the EMA from below, but it also respects the downward trend line, creating a strong confluence of signals. When these confirmations align, we have a much higher probability sell opportunity, and we can enter the trade while following proper risk management.